Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market, then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market at the moment testing and rejecting to the upside a very strong historical monthly demand and support zone. In fact, what we know is that from here, all these previous rejections to the upside were created. Every time the market tested this zone, it got rejected to the upside very aggressively. And in all this period that it was spanning many years in the price action of EURUSD, only one time the market managed to break below that zone, and it was right here. And immediately after the market, anyway, it managed to break back above that zone. All the push to the downside ended up being a fake breakout. So this one here was a fake breakout to the downside. The market broke back above and continued respecting this level as support. Now, once again, the market is testing that same zone, and already it has started rejecting it to the upside very aggressively. The last times that the market was rejecting this zone to the upside in such an aggressive way, the market managed to continue higher. So what we could expect is more bullish price action away from this zone, as already happened in the past when the market was testing and rejecting to the upside this exact same level. Now, this push to the upside is coming with strong institutional buying, and we will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the weekly time frame. Now, here in the weekly, we can see a perfect inversion of trend. We can see how the market went from the creation of weekly lower lows and lower highs into the demand and support zone. We then had the double bottom being created exactly at the demand and support zone. And now the market has shifted to the creation of weekly higher highs and higher lows. So we had a perfect inversion of trend from a weekly bearish market to now a weekly bullish market. So from the creation of weekly lower lows and lower highs to now the creation of weekly higher highs and higher lows. So perfect inversion of trend here from a weekly standpoint. What we can also notice is that the most recent price action is showing a strong rejection away from a previous level of supply and resistance to now a zone that has been turned demand and support. In fact, from here, all this previous rejection to the downside was created. So this was a strong, in this case, weekly supply and resistance area. However, the market then managed to break back above that zone, and the previous supply and resistance became demand and support zone. The market has tested the demand and support zone and is currently rejecting it to the upside. We can also notice that as we have an impulse and correction, if we want to measure the correction after the impulse, we have to take a Fibonacci from the low to the high of the in this case, impulse to the upside, which shows us how we have the 0.32 50% and 0.618 Fibonacci retracements, all in perfect confluence with the previous supply and resistance, now turned demand and support. Now, this creates strong demand and support zone and confluence of demand and support zone, which means that we have an increased probability of seeing institutional buying inside of this area. Now, as we drop down on the daily time frame, before we check what kind of structure we have from a daily perspective, let's see what institutions are doing here on EURUSD inside of this area. Now, if we look at the data for the euro, the first thing that we have to keep in mind is that since all currencies on the spot are traded against the USD, and we're looking at the data for the euro, we are actually already looking at EURUSD because, again, all currencies on the spot are already traded against the USD. And what we can see here is that on EURUSD, institutions have been aggressively increasing their net positions. We went from a negative net positioning, so minus 64k net positions, meaning that institutions had more shorts than longs, to 130,000 shorts compared to only 165,000 longs, all the way up to now having the complete opposite. So a positive net positioning plus 93k net positions with way more longs than shorts, 208k longs compared to only 115k shorts. So essentially now we have double the amount of longs compared to shorts from an institutional perspective on EURUSD, with another 5,900 longs added just with the last report and 4,200 shorts getting closed. So institutions have been aggressively buying EURUSD, therefore making it stronger. Let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. Now here in the daily, I have spoken about EURUSD a couple of times already in the past. I spoke about it when the market was here. I explained all the reasons for which I was expecting this rejection to the upside. And again, here, I explained all the reasons for which I was expecting also this push to the upside. And by the way, I will link in the description these previous analysis, so you can go and check them out for more free education. Now, at the moment, what do we have? Well, here in the daily, there is one important level, which is this one here. This is the previous high from which all the previous push to the downside started. Again, here was respected as resistance. Until the market will remain below this level, it can easily continue lower. However, if the market manages to break above the zone, that is where things get interesting, because this previous resistance would become support. And after the break on the retest of the previous resistance turns support, that is where we have an increased probability of seeing more institutional buying, which at that point could further increase the probabilities of seeing more bullish continuation away from the level. So if we do get this break and retest, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area, fueled by strong institutional buying. That definitely wouldn't surprise me.
Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.